Hello and welcome to the Crypto Jungle. My name is Blue the Bear, and here on the channel we keep crypto simple. This is your source for no-nonsense fundamental analysis and technical analysis. If you want to learn how to trade and invest in cryptocurrencies, then hit the subscribe button. In today's video, we're just going to do a quick market update, take a look at Bitcoin, take a look at Bitcoin dominance, and then just wrap it up. So without any further ado, let's go ahead and take a look at the king of all crypto, that is Bitcoin. So we're going to start out here on the weekly chart. Let me slide that over so you can see. So basically Bitcoin has been in a pretty relentless downtrend since its dead cat bounce all-time high here. So a lot of people waiting, or a lot of people were expecting this kind of blow off top like structure. We didn't get the blow off top. Our market cycle basically ended back here at the end of 2020, early 2021, and we're looking at kind of a distribution range like this. Let me put a range around it right there. Kind of looking at a range like this with a dead cat bounce. You can see by the volume here, the volume was declining throughout this whole bounce, and then the supply began to increase on the way down. So we're sitting right at the bottom here. So, you know, I will give a point to the bulls that we are at a support range. There is a possibility of a bounce, but a bounce is not what I am looking for. I am looking for further downside. I'm looking for market-wide panic, capitulation, forced selling. That's where I'm going to be coming in and stepping in as a buyer. Now, a lot of people are convinced that 20K is the name. 20K is the level to be watching. Now, I'm a little bit more pessimistic. I'm a little bit more bearish. There is a lot of confluence at 20K, but when we look at the market support and resistance, we need to look at how much structure has been developed in that range. And to me, a blow off top has not developed a ton of structure. You can see one touch point here for the blow off top, a little tiny bit of resistance here, but really, like, we were on a rally. This whole move right here was just one continuous rally. So I did not see a lot of market structure there. I would not be surprised at all to see us come back down to this general range right here, where the order block, let's actually just delete this here and get real bearish with you. You can see that the rally really kind of accelerated out of this area. This was kind of the retracement of the DeFi summer. So once we broke past that, that's when things really accelerated to the upside into our first peak of a high of 64.8. We'll call it $65,000. But the order block is back here at DeFi summer. So if we just put a little cap around that, this order block right here is our strongest kind of support range, and that block is sitting at around $12,500 to $9,800. $9,800 is not what I'm shooting for. It is a possibility, but everything in technical analysis is all about possibilities and probabilities. The further down you go, the less probable you should be interpreting that analysis. So although 9,800 is a target for the order block, it's not necessarily something that I would be looking for. I would think that that's kind of the lower end of probable. 12 and a half, that's more probable, but I'm also looking at this kind of range up here at around 14K, where there has been a lot of structure. So, oh, that's not 14K. Well, 14K was this blow off top. So, you know, it's in terms of structure, it could be, you know, a lot worse than a lot of people are calling for. So that's kind of the narrative. That's kind of the name of the game. That's the cautionary tale, if you will, that we're looking for. A potential large retrace, but well below the 200 simple moving average. This is the 200 week heat map for those wondering right here. 200 week heat map if you want that put on your chart. So, you know, it's definitely not impossible. A lot of people think that it's improbable, and rightfully so. Going back to kind of the bull case as we're standing right here, we got about 3 days left in this weekly candle here, maybe 2 days or 1 day by the time you're watching this video, there is a possibility of a bounce here. So if we look at this wick right here, there's a lot of demand below this level. You can see by the wick here, there is a lot of demand. So we can't ignore that demand. We can also see that that demand is showing up well out of the normal range of volume here. You can see kind of the generalized range, and then boom, a large candle sticking out of that. So there is demand in that area. Is it going to be enough for the bulls to be able to reverse from this level? Yet to be seen. My bets are on no. My bets are on the lower end of the or continuation to the downside. If we go down to the smaller time frames, taking a look here at the 1 hour, as you can see here by this short position, I am short on this on Bitcoin. So definitely a bit of a bias there. Understand that I'm short. Obviously, I'm going to be talking about bearish things. But what I'm looking at for this consolidation is a Wyckoff redistribution schematic, and more specifically, Wyckoff redistribution schematic number 4. So let's go ahead and take a look at that. Going into the Crypto Jungle Discord here. This is this content is available to all who join the Discord, links below. But taking a look at these schematics right here. So these are a few different structures that you see in a Wyckoff redistribution. All of the top two are a range bound condition where you're not disrespecting it off of the top of the channel or below. And then redistribution schematic 3 is a consolidation that fails out of the bottom of the channel. And then redistribution schematic number 4 is where you have a very large shakeout, and then you have a sideways trading environment that happens at a higher level of the shakeout. So you basically have an overcorrection to the downside, and then we start trading sideways at a higher level. So taking that into consideration, we've got the shakeout, automatic rally, secondary test, trading sideways, and the tightening of the spread and heading to the downside right here. That's kind of what we're looking at with Bitcoin. So we have a large shakeout, automatic rally, secondary test as indicated by these labels right here. We're trading sideways. You can see a few different points of interest here. Let's get a few labels here. We've got a up thrust right here. We have an up thrust right here, or kind of a BART style pattern right there. An up thrust right here, and an up thrust right here. This is not what you want to see. An up thrust, for those who are focused on different technical terms, it's a failed rally. So we have attempted to rally out of this consolidation once, twice, 3 times, 4 times, 5 times if you count the automatic rally, and we've failed to do so every single time. So there is definitely the possibility of further downside if this pattern is to continue and follow the Wyckoff distribution schematic. We would be looking at something like this, coming back down, testing the $28,000 levels, and then potentially coming back down to the 28, where we could go into full-blown capitulation. I'm kind of looking forward to that. That is what I'm hoping for, not only because I'm short. Obviously, I want to see downside if I'm short, but what I really want is I want the market to capitulate. I want the market participants to give up, because what that represents is the conclusion of the hyperwave, the conclusion of the price cycle, not a hyperwave, hype cycle. The hype cycle is something that happens every single time. It's why we boom in crypto. We boom, we bust. It's what we do. And the capitulation is kind of that final straw. That's that final step. Once we go into capitulation, what I'm wanting to see, let's go back to our high time frame chart here. What I'm wanting to see is I want to see accumulation. Now, accumulation, everybody's calling for some sort of bounce. You see it all over Twitter. You see, oh, we're going to hit this level and then we're going to bounce. I don't think so, buddy. I don't think so, Stimmy Jimmy. It's just not going to happen that way. What we would be looking for is maybe a correction down to that level, and then a multi-month accumulation, at least a 3-month accumulation. We're looking at a quarter year of accumulation. Doesn't mean it can't bounce. It just means that if it bounces, we're not going into a bull market. If it bounces, we're going to be looking for a bearish retest, probably under the underside of this. So maybe get a bounce and then a bearish retest, and then come back down to further levels to complete our accumulation. It's the price cycle. It's how it goes. A lot of people overcomplicate the Wyckoff method. They overcomplicate analysis and the hype cycle, price cycle, whatever you want to call it. It can really be boiled down to this graph right here. The Wyckoff price cycle, okay? Accumulation, markup, distribution, markdown. Okay, let's break this down again. Accumulation, we trade sideways in an oversold condition. Then we go into markup, where demand is greater than supply. Then we go into distribution, where we trade sideways in an overbought area. Then we go into markdown, where supply is greater than demand. So I want to ask you, is demand greater than supply, or is supply greater than demand? If you were to turn to your neighbor right now and say, hey, the crypto market has more demand or more supply in the market, what would you be telling them? So the way I'm looking at this is the tail end of a macro distribution, and we are heading into the markdown event, into our capitulation, where this whole cycle starts again. So that is what I am hoping for. That is what I would like to see accumulation come a little quicker rather than later. But ultimately, we need to go into some sort of period of accumulation before we can even entertain the idea of a markup event. So if you're holding on to altcoins, by the way, this could get rather ugly. Bitcoin dominance is trending to the upside. You can see that we are rallying out of this level right here. Let's go back to the daily chart on Bitcoin dominance. Now, for those new to this chart, basically how it works is when this chart is going up, altcoins are going to rally less and dump more. That's kind of the long and short of it. Altcoins are going to rally less and they're going to dump more. This represents the market capitalization of Bitcoin against the entire cryptocurrency market cap outperforming. So it's showing a resilience. This usually rallies in a decline of a market, typically in a bear market. My targets for Bitcoin dominance are up at around 60% dominance. We're currently at around 45. Not a very good thing for any altcoin portfolio. So if you are a 100% altcoins 100% of the time, you are in for a bad time. Not trying to spread FUD, just trying to share the analysis that I have found, able to help me survive in these markets. These markets are all about survival. So if you want to learn more about risk management, links below to the Crypto Jungle. We have 4 different packages. We are offering a 25% discount on your next 2 payments. So whether you choose the monthly plan, the quarterly plan, the biannual plan, or the annual plan, you will get 25% off of that using the coupon code BEAR. That is all the time I have for today. If you enjoyed this content, please leave it a like. Don't forget to subscribe. And if there are any other projects that you want me to take a look at the TA on any of your favorite shitcoins, leave them in the comment section down below. And until next time, please trade safe. It is jungle out there. Peace.